I'm Matt Bouchard with NAREITWeek.com here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Bobby Taubman, Chairman, President, and CEO of Taubman Centers. Bobby, thanks so much for joining us again.
Delighted to be here, Matt. Thank you.
Now, when we last spoke late last year in Las Vegas, you were very enthusiastic about Taubman's share-buyback program. Has that enthusiasm changed at all?
No, we're very enthusiastic about our company. We did announce a $450 million program. We got $300 million of it done. We have almost $150 remaining. But you can do several things with your capital. You can build things, you can redevelop things, you can buy things, you can pay down debt, and you can buy back stock. You know, we found some things to do. We bought a 50% of Country Club Plaza with Macerich. We were delighted to be able to do that. We have a tremendous amount of development and redevelopment that we're working on. So for the minute, the stock buyback is on the back burner, but it is something that we'll continue to do over time. On a net basis, since we've been public, we've actually bought in more shares than we've issued. Yet we've grown dramatically over many years.
Now, we hear a lot in the news about some of the upheaval in the retail business and struggling retailers. How is Taubman able to increase rents in the face of this type of environment?
Well, we've been very fortunate to be able to build a portfolio of the highest quality assets. Many analysts in the community believe nearly 100% of our income is coming from A-plus kinds of assets. So these are assets that shoppers want to be in, retailers want to be in. There's tremendous demand for our brick and mortar. When you look at all our statistics, you look at lease space, you look at occupancy, you look at the spreads. Over the last 5 years, we've averaged a 22% rent spread on opening and closing leases. So all of the numbers, as you look at the core metrics of our business, have been strong. Why? Because we have such high quality assets, and those assets are really in demand by shoppers, retailers, capital sources, investors, and the like.
And with all those positive trends going on, what do you see as still remaining as sort of the biggest obstacle facing Taubman Centers in the second half of the year?
Well, first, we want to execute in our core. It's always the most important thing. And this year, we've guided the investment community to about a 5% NOI comp. For the year, we're delighted with that kind of growth. And number one, we need to execute against that guidance. Number two is the pipeline. We're opening 4 projects this year. We opened one in China already, in Xi'an, China, big 1 million square foot center. We were on time, we were on budget, we were on our returns. The center looks terrific, very high quality construction. We're very pleased with it. We're opening Hawaii next in late August. Then after that, we're going to open in outside Seoul in Hanam, Seoul, South Korea, 1,700,000 square foot center. And then in Zhengzhou, we're opening 1 million square feet, Zhengzhou, China, and also in the fall. So we got a full plate. We got 4 projects this year. We still have 3 to come. So secondly, we need to execute on that pipeline.
Great. Bobby, thank you so much for joining us.
Matt, thank you for having me today.
For more from REITweek 2016, be sure to visit REIT.com.